systems to give us a an exceptional rate of return as opposed to a reasonable rate of return. So what we need to remember from this is that be aware that the average drawdown will increase. So our maximum drawdown will decrease. We know that 65 to 80% of the time your system will be in drawdown. So psychologically, we need to be prepared for that, as we do as traders. We know that it's like, two steps forward, one step back, one step forward, two steps back. So it gets like that. But what we need to remember is that when we start taking those 2-3 steps forward and we get on a winning run, which I'll show you in a minute with this data, that's when we want to capitalize on those great runs, those great trades, and there's ways in which we can do that applying good money management. So really the key to our system is, and we haven't talked about it here, is really, and this is what we'll talk about with our money management, it's all about selecting the right percentage increase, or we call it our delta. So for those of you who have done any type of fixed ratio trading, it's a term we use to increase our contract sizes. We use what we call a ratio to increase our contract size. So rather than, typically what happens with most of us is when we open a brokerage account, the broker says, all right, well, you're trading, this is what your margin is. You've got, $1,000 margin for the futures. We typically recommend you use, you apply 2% per trade, and that should keep you in that safety zone, that buffer zone. But what that typically does is that if you apply 2% per trade, then for you to, usually what happens, or 1 or 2% per trade, you're going to have to pretty much double your account size to trade a second contract. Now, so what happens there is that when you're trading, you might be going through a really good equity run, you're getting increase in contract size, you're getting increase in capital, but during that run up, or that increase, you might have gone from, say, $1,000 worth of profit to, say, $3,000 worth of profit. But if you're still working on the principle of 1% per trade or 2% per trade, then you still may not have enough money in your account to actually add another contract. So based on the 2% rule. So is there a way we can basically use a different strategy to increase our contract size? And that's where we talk about using what we call a delta, or a fixed ratio method of money management, but we'll get into that in a second. But that's really, that was really an example of the combining strategies or systems. Using the combined approach, you can see there that the goal, or the key concept there, is to reduce the amount of drawdown you get. Ultimately, that's really what we're looking to do. And we optimize our system by not trying to find the greatest indicator, or the best way to get into the market. And if you've read any of Van Tharp's books, and if you haven't, you definitely should grab a copy. He talks about the entry to the market as being about a 10% part of your system. So if you're grading your system on performance, he allocates around about 10% to getting the entry right. So if we look at the system as a whole, we would say that the entry is probably one of the least things that we worry about. But a lot of us spend a lot of time trying to get the ultimate entry to get into the market, whereas the reality is, what we need to spend more time on is making sure that we get into a trade that has a statistical edge in the market, but we utilize position sizing and money management to take advantage of when we get into the market. And that's really the key for us. We want to make sure that if we're trading, we've got a exceptional reward to risk, that we use very good position sizing and money management to add to our contracts, and I'll show you some examples of that shortly. So let's move on to our data. So the key really to success with money management and to using these systems is is to increase the ratio of net profits to max drawdown. So really, we want to lower our drawdown and increase our net profit that we accumulate along the way. So I'm just going to show you some stats here for some trading that we did on the Russell and DAX, and I'm just going to bring this into the room here. Now I want you to focus on. Firstly, I want you to focus on. We'll just go back up to the top. So we'll just focus here for a second. So over here, basically what we've got is we've got a rundown of our DAX trades. This was from August to October. So this is us trading the DAX in 2008. 372 trades, 673 trades, 372 winners, 301 losers, 55%. So the win rate was fairly ordinary. 1.73% profit factor. Our average losing trade was €333, so not dollars. We made a total of 1,596 points for the entire period. Now our maximum drawdown during this period, and you can see it here, our maximum drawdown during this entire period was around about 50% of our net capital. So we actually traded this system through a 50% drawdown, and we started with a fairly small trading account size, but you'll see that it really did nothing for the first couple of months that we traded up until about, I think that was about June, July, and then it really got a kind of a boost up. But it went through a huge drawdown here towards September, so not really anywhere near the start of the system or start of the trading, which was good, but it did sustain a fairly significant drawdown. Now the key here is that the system made €1,596, so that's about €39,000, which is good on a strategy. I mean, that's a fair time to trade it, and I'll show you some numbers on the multi-system strategy over a 2-month period, not trading every single day, but it's done almost the same number, and this was over